Hello and welcome to Share Talk, and welcome to a company presentation by European Green Transition. We are joined today by Friel, who is the co-founder of the company, and by Jack Kelly, who is the CFO. And they're going to go first into, but the running order is first into a presentation with the slides, then a few questions which have been carefully curated by myself and Share Talk. And then if there's time, go into questions from the viewers and listeners. How are you today, gents?
Very good, Zach. Good to see you. How are you?
Doing well. I'm on the edge of my seat waiting to hear what you're going to say.
Oh, hopefully we'll deliver. What do you think, Jack?
Yeah, look, I think we have lots of exciting things to talk about, so we'll crack into it.
Good evening, folks. Thanks, everybody, for tuning in this evening and giving us time to update. I know I'm joking there with Zach, but there's actually a bit of reality in that joke. This company originally would have been called European Green Metals. Jack, myself, and a few of my colleagues in Raglan would have primarily funded it through friends and family for a couple of years when it was called Green Metals. That was 2-3 years ago when we all knew lithium, rare earths, everything was very hot and you couldn't get enough of them. And then as we approached IPO this year, we decided, right, it's a bit like we transitioned from metals to the more sexy area of where cash flow positive business. And that's, being honest, as we approached the IPO, Jack came up with the genius idea. Literally, it was him. I said, what the hell, we do this name? Because we decided we were going to divest our metals and mining. There's nothing wrong with them, but it was a genius stroke with Jack saying, look, by the way, I can get this name. We've got .com, .uk. We just moved one word, but that word was really important, all joking aside, because our statement of intent was, this is my 5th IPO with Jack and a small team in Dublin, and every other one has revenues or near-term revenues, and I just get uncomfortable when there's no revenues there. So, and mining, unfortunately, that's the nature of the beast, that the revenues can sometimes be far away. So we decided we would transition away from our metals and transition into the modern economy, where we said of where there's the green energy particular, and we said we're going to find M&A assets that have cash flow positive, that have real revenues. So let me tell you how we're getting on in that regard. So anyway, I think, look, I've said the team tonight, presenting team is myself, Friel. I'm the co-founder, the largest shareholder, non-exec director, and I'm along here with Jack, who's more or less the co-founder along with me and some other colleagues, and he's our CFO, and he's also a shareholder in the company. It's now almost 8 months since we completed the IPO of European Green Transition. The share price, I know every tonight, including myself, is not where we wanted. It has come back, although in recent days, it has now come back up a little bit. But look, that's a host of reasons. I'm not going to go blaming everybody, saying it's to do with the AIM market uncertainty, the UK budget, US elections. Yeah, that was all the excuse. It did hit everybody's share price. But I think those uncertainties are out of the way. And going into the year ahead, I have a bet, just to be controversial, I have a bet that, I'm not saying I'm a Trump supporter or not, I don't political sides, but I bet the year ahead could be absolutely enormously important for everybody in Europe and around the world. My bet is the Ukraine deal will be done very quickly post the new president transitions into the White House. Very quickly. It's very clear in recent days that a grand peace settlement arise in the Middle East. So I think for the first time in a generation, you're going to see peace in the Middle East. And Trump's going to be the right place to accept the credit step. If you imagine what that's going to do to Europe, you're going to have the greatest rebuilding program in the history of mankind, and also one of the most troubled, consistently troubled regions of the world having peace. And again, a lot of rebuilding. So again, a lot of things we're looking at. So that's where I'm coming from. I think all that uncertainty of the last couple of years is gone. And the market certainly in the US, I think, London still hasn't got going. But the US has really, really picked up. Say, right, the uncertainty's gone. Let's all get on and make some money. It's the kind of view in the US. Also, just say that I did say I'm the largest shareholder, and I want to reiterate that the drop in the share price definitely hits me as well as everybody. Just for the record, at the IPO, as it's done on all my previous IPOs, I put in £300,000 at the full 10p price. Prior to that, as we co-funded this company pre-IPO, I also put up to £500,000 in that. So I'm hugely excited about this space. I just think it's a fantastic space, particularly in light of, say, of the the transformation that I think is going to happen in Europe, in the Middle East, and around the world over the coming years. I'm also, I say this is my 5th IPO. The one I'm very impressed with we did was Amryt. So I think with this company, we can replicate the success we had with Amryt. Myself, the founding team, and the rest of the pre-IPO insiders, we have over 40% of the company. And guess what? We actually, which is quite unique, we have actually locked up our shareholding for not 1, not 2, not 3 years. So we cannot sell for 3 years. That's April the 3rd, 2027. So we're not going anywhere. And I think there's no big deal with that. As directors and founders of the company, you can't really sell while you're on the board. So, but it's still a nice gesture. For everybody to know, there's 40% of this company cannot be sold. There'll be nobody selling shares. There's not a company we've taken founders in 12, 18 months, 2 years later, they're sneaking shares out the back door. Hard lock up for all pre-IPO people for 3 years. And as with our previous IPOs, and that namely basically particularly Open Orphan, now named hVivo and Amryt, we built them up really picking up distressed companies and turning them around, and finding such assets does take a bit of time. So we're basically only IPO'd 6-8 months ago. So I know people are waiting on when are we going to get them, but we are work in progress, and our plan would be to bring in assets at knockdown prices. Let's be honest, that's distressed assets about. So all that emphasize people will ask, I know the question, when you'll see some deals. We have some deals we're working on. I'll come to that in a minute. But to reassure people, the plan will be to get revenue producing assets sooner rather than later. Open Orphan, just for the record, in the first 6 months IPO, and I'm sure Zach will remind me of this, we IPO'd at 5.7p in June 2019. And again, that was a very uncertain time in the market. But within 6 months, that share price was down below 4p, was down well over 40%. However, hit a low point around December 2019. And then it took off, roared the whole way up to 48p. I know, again, Zach will say maybe I over-promoted that one. Hands up. Yeah, probably did that. But it's still consistently, I got my exit this summer around 29, 30p. So doing an IPO at 5.7 and being able to sell out at 5, 6x. And that was after 3-4 years. That's the kind of return I think anybody investing in small cap AM companies, we're not looking to generate 5, 10, 15% per annum. I did say at the IPO, we wanted to double the share price 10 to 20p within the first 12 months or so, and triple it within 18 months. And that is definitely our plans and objective. So that's, Zach, you can remind me as we approach the summertime, where's the 20p, old Dean? And that's, we're going to be determined to get it there. Can't guarantee it. I use the word determined to get the share price up there. So really what I want to do is now take people to a couple of slides from here forward. So just a little, I don't want to overemphasize, a lot of people who maybe have come in wouldn't have known me. So basically, European with a track record of quite a few IPOs, 5 in particular. We're looking at the European green economy transition because it has huge opportunities. We're seeking to do everything through M&A. And I say that directors have a reasonably strong track record. For instance, Michael, Noel, and myself were involved in Cove. Cove went out in 2009, IPO'd at 1 million at a 2p share price, and 36 months later was sold at £1.76. Now that's one of those once in a lifetime ones. I say I only had a periphery role. I didn't help get it going day one. The other one I'm very proud of, Amryt Pharma, that was originally my fastest oil and gas vehicle, and anybody who stayed in got about 4 or 5x their money. We did the IPO in 2016 at 50 million, and most people thought we'd never go anywhere with it. It was sold in last year for 1.48 billion. Now, it didn't have the Cove 100x uplift. There was acquisitions done, but still 4 or 5x over a 4, 5, 6 year period is not bad. I've already talked about Open Orphan, so I think I'll move on. Even today, the market cap of Open Orphan is still around 150, 160 million. So what have we been doing since the last 6 or 8 months? We completed the IPO. We raised gross proceeds of 6.4 million, and we listed an AIM. We expanded our focus to the entire green economy, and I emphasize European green transition is not a mining company. We do have mining assets, but unfortunately, I love those assets, a bit like having kids. It was time to, the kids are growing up, it's time to move on, lads. So it was on these assets. And the benefit of doing 5 IPOs, you can continue to follow the market where it goes. And the market the last 2 years, as you all know, in the last 3 years, went off mining stocks. So we said at the IPO, we'd spend no more than 10% of the proceeds we raised on our mining assets. And I'll come to that in a minute, because we are making it good how we're going to monetize them by spinning them off. But let me come to that in a moment. M&A strategy is we're very much revenue generating business we want to get that are in the green economy. If they're distressed, they probably won't be profitable just now, but have a clear pathway to profitability. When we acquired hVivo, in the year before we acquired it, it lost 25 million. Within 3 years, it was making 15 million. That's a 45 million turnaround between losses and profits. The same when Amryt acquired Algerian, and the year before Amryt acquired Algerian, it actually lost a bigger figure, 150 million. And within 2 years, Amryt was making 147 million, and that was EBITDA line. Just taking you to the bottom of this slide, we already, since IPO, we brought in 2 new projects that we believe have near-term revenue potential. Jack and the team are working them, and bear in mind, we love the team when I say Jack. I'm probably the cheapest, one of the cheaper founders in the whole of AIM. I forget what I'm on. I think I'm on a 25 or 30,000 salary. But my real interest is in the share price, and I have a very large stake in the company. There's Jack, Caroline, and Aidan. So this company has 3 full-time staff, and we don't believe in overpaying either. We have some consultants. So Jack and the team are doing due diligence, working up, first of all, the copper tailings recycling project in Cyprus. Jack will talk through that in a moment. And look, we like this idea of options. We don't like buying things and wasting your money and our money till we know we definitely have something we can generate revenue. But the second option we took over, the Alum carbon credit project. That project is probably piling ahead, maybe somewhat faster than our Cyprus project. It is very much getting huge interest from the data centers in Ireland. It's got most data centers. And even today, we had one of the larger airline companies looking to acquire carbon credits in destinations where they fly to. So more to come on that. Our Alum rare earth project in Sweden, that's our main mining project. And we did results. We drilled it this summer. We did it. Aidan and the team did a great job. They did it slightly under budget. We did say we spent no more than 600,000 this year on those. And basically, it looks like now at the moment that is a district-wide potential. So we're already talking to our neighbours in Ragnar, and our belief there is that we will monetize that. We're in lots of discussions by vending that off to another a much larger mining company. Will have the balance sheet, and we'll get an equity stake. And at the appropriate time, is it 12 months, 18 months, we'll release cash from selling those shares in that company. So the last blob here, we're seeking to monetize our other exploration asset, which is the Pichala copper project in Sweden, and potentially the Saxony project as well. And again, Jack is leading the charge. There's a Quetel and Aidan in trying to find partners so we can get those assets, and we call them, they're still our assets, off our balance sheet, and get a real equity stake that we can monetize going forward. We just might go to the next page. So you may ask, yeah, you guys are pretty good. I've done a lot of M&A. I'm originally, I turned 60 this year, and I've spent the last 40 years buying and selling things and doing M&A. So we can do the M&A, but you may rightly ask, Carl, tell me how you're going to monetize things by spinning them off. So basically simple. We even spun Amryt Pharma out of hVivo. So we're good at spin-off. So that's really what we're going to do here. We're going to spin the Pichala copper project into an existing mining company. And that won't be a huge consideration. It's not the biggest asset. The much bigger asset is the Alum one we spent the money this summer. And again, we're going to vend that in for an equity stake. We're not being unrealistic. We want cash for them because we believe these assets will mature more over the next 12 or 18 months. And we'll get an equity stake. And our belief, when you look at this map, there's going to be huge interest. Europe is going to need to find have its own critical metals, and particular rare earths. And if you look at across on the right-hand side, the strong geopolitical tailwinds now, in particular, the Australian government has just delivered 1.65 billion for a rare earths project in Australia. And then just this week, the New York Times said China's looking to ban rare minerals and rare earths being exported. So our thesis here is that Europe's it's a bit like America first. Europe will have to be Europe first. It will have to find and develop its own critical metal resources. And that's already underway. And we don't want to be the person spending all of that shareholders' money developing those assets. We think that's not our core activity. Our core activity is generating shareholder returns and getting that share price up. So there will be parties who will develop rare earths in Europe, and we're already talking to them. So watch this space. At the appropriate time, Jack and the team will vend those mining assets out. I say the focus is 100% purely on real revenue generating. And all joking aside, assets in the transition economy. And what do we mean? That is where Europe is moving from hydrocarbons to renewables. That's wind, solar, and all that good area. Jack, that brings us to the next slide, does it?
Yeah. Thanks, Carl. So I'm just going to take everyone through a couple of slides and go into detail a bit more about what we're doing. First one is really around the M&A model with EGT, and just, I suppose, outline exactly the types of businesses we're looking at. I think Carl touched on it there briefly. But the key focus is, as Carl said, identifying revenue generating opportunities in the green economy. So moving beyond the mining space into the wider green space, into service providers, into wind energy companies, into solar companies, recycling, etc. And we're having a number of discussions with on a number of different businesses that we think we can pick up quite cheaply. I think we just wanted to outline on the box on the right there the key acquisition criteria. So I think we've mentioned it a few times now, but revenue generating is the main red line here. We want a business whereby there's actual activity and it's generating revenue and ultimately giving a clear pathway to profitability and to cash flow generation. Another clear point is we want minimal technological risk. So we don't want to be taking some new technology, that has that's proven in the lab or proven on a small scale and try help it grow or actually operate properly in the economy. We don't want to be the people footing the bill for that technological risk or that development risk. And we don't want to be investing significant capex of our shareholders' money into these businesses. We want to get something that we think we can scale in a public company and use our expertise that's been shown across Open Orphan, Amryt, and a number of other companies. So back over to the left-hand side of the page. So the market is rapidly evolving. It is changing, but it's also presenting significant opportunities for someone like ourselves who can pick up something for a fraction of the cost that's already been invested and ultimately have it re-rated in the public company, and we can drive significant value from that. I think Cathal mentioned our model that we have 3 full-timers at the moment, and we have a strong cash balance. So we have, I think we had almost £5 million announced at the 30th of June, and we still have a lot of that remaining. And we have no committed costs. So we have no further committed costs to any of our exploration projects. Very, very low ongoing holding fees for them in the sort of single digits in thousands over a year over the next 3 or 4 years, and very low headcount, as we mentioned. So that's in summary, they're the types of acquisitions or businesses we're looking to acquire and to bring into EGT, and hopefully we're working hard on moving a number of discussions we have along, and hopefully we'll be able to update you all in the near future. So then next thing is just really to touch on some of the other some of the assets or the mining assets that we currently have within the business. So particularly the Alum rare earth project, which Aidan and the team have done an excellent program on over the summer. What the plan was over the summer to do a bit of drilling up there, to spend less than 10% of the IPO, of the funds raised at IPO, and ultimately to show a district scale potential to make it more attractive to incoming partners down the line. And I think we've achieved that. So just to give you an overview of the project, so it's located in southern Sweden. It's 100% owned by EGT. It's been designated by the Swedish Geological Survey as a project of national interest for rare earths, which is very encouraging. And it also has a historic 43101 resource estimate. So we've received, from the drill program we did over the summer, we've received results for the first 8 holes of the 1,500 meter drill program. And the results so far confirm that there's a district scale potential. So you'll see the red box on the bottom right of the picture is where the historic resource was. And we've done work at Alum West, which is 300 meters to the northwest of the historic resource, and also up in Jupiter, where we've had some very high grade work, which is about 2 kilometers away. So ultimately, just the purpose was to show that this is a district scale system, and it's something that some of the bigger exploration and mining players will be interested in, that there's the scale there to make this a really attractive project. So of the results, there's a few listed here, but some very good grades. 1.5 meters grading at 3.48% to your total rare earth elements, total rare earth oxides. Then another 2.55 meters grading 1.6% to your EO, and then a really high grade and the best grade we've actually had at Alstrom of 0.5 meters grading 8.83% to your EO. So really, really encouraging. All the holes and all the targets so far have intersected broad alteration, which again, we're very confident this is a critical step towards monetizing the project with a third party. And we expect that the remaining results from the remaining 5 holes be published, in the coming weeks. So additionally to this, Aidan and the team have done some metallurgical work. Ultimately, in short, the rare earths up in Alstrom, it's been shown that they can be recovered by standard processing in a third-party facility. So essentially, that's a key step in that we don't have to build some type of unique, bespoke process for this or site. That ultimately a prospective partner can take this out of the ground and ship it on to a processing facility with a well understood process. And again, we see that as a critical factor in being able to monetize the project in the coming months. So I think Carl mentioned we had a number of option agreements, this one being the Cyprus copper tailings recycling project. And the key attraction to these was that they're near revenue potential with these projects. So, and this is a 12-month option on the old Limni copper mine in the northwest of Cyprus. So this was 8.1 million tons at 1.1% copper. It was mined between 1937 and 1978. You can see on the top right-hand side the historic pit before it was infilled. And obviously, most of this mining happened 50, 60, 70 years ago. So a lot of the actual copper still from techniques at that stage still remains in the tailings. So the tailings from the mine, so the waste from the mine, was deposited near the coast at Limni, about 2 kilometers from the original pit, for about 30 years. There was an EU-funded program where basically they shipped the tailings from the beach and backfilled it into the pit, which you'll see down in the bottom right. So essentially, they filled in the pit with the old waste. So from this, a lot of the tailings had oxidized, and ultimately, as a result of that oxidization, and we can see an outflow of blue metal-rich water circulating within the pit. So that you can see in the bottom right photo, this is the color of the water from the oxidized copper. And we've done sampling on this, which has confirmed that there is copper there. We've had results up to 0.92% copper at surface, which is very encouraging for a potential project. So ultimately, what we're trying to do here is evaluate if there's the opportunity to generate revenue and to actually process this copper in the near term in a capital efficient manner. So the first the way we're looking to do that is a low cost hydraulic pumping method. And so this won't be going in with big diggers and looking to reprocess the old site. This is simply pumping water from one end of the pit to the other, and extracting the copper from the water in a very low cost manner. So you can do this with 2 or 3 sort of modular containers on the side of the pit. And we think there's a sizable chance that we can generate meaningful revenue from this. Following that, there's also the opportunity. There's also a pretty big solar opportunity here. So obviously, Cyprus, given where it is, gets a lot of sunlight. But Cyprus is heavily reliant on fossil fuels for its energy generation at the moment. So we see the opportunity here to, once we rehabilitate the site, extract the copper from the water, and to partner with an established solar developer or operator, to ultimately hopefully get a carried interest within that, and get a long-term revenue stream from this solar facility that we've helped rehabilitate in Cyprus. So the next slide just indicates some of the due diligence we've done in Cyprus already. We took 68 samples, and we've confirmed the presence of copper. So our samples have ranged from 0.41% to 0.92%, which is a pretty high grade. We also found evidence of gold at the site. So that's something we can use to potentially do some type of deal, and if we exercise the option to outsource the gold exploration rights, we won't be looking to develop any gold here. We're looking at the near term revenue opportunities, and we've been engaging with a number of the key local stakeholders, really to get us in a position to move on to the next stage of diligence, which is to do a proof of concept hydraulic pump test, to really get a better understanding of the circulation of the water in the pit, and then ultimately that will help us evaluate whether we can actually do this at scale and generate meaningful revenue in the near term. And the final second option agreement I just want to run through is our Peatland carbon credit program in Donegal. So this is a 1,370 acre site in the northwest of Ireland, in the top left of the picture. So peatlands cover 1.5 million hectares in Ireland, and about 30% of those are degraded. So you can see in the map here, between the purple and the yellow, the large quantity of raised and blanket bog, with a large portion of this currently releasing stored carbon into the atmosphere. So that's ultimately why we're looking to do this. So drained or degraded peatlands ultimately release carbon as CO2 into the atmosphere, whereas a properly functioning peatland naturally sequesters carbon by absorbing it through the plants and ultimately storing it in the ground. So our plan with EGT is to actually scale significantly beyond our existing Alton site of 1,400 acres, to commence generating carbon credits, biodiversity credits, water quality credits within these sites. So it's like a number of these things. The more scale you get from this, the more benefits you can get. I think we want to be also very clear in terms of the business model. We will not be acquiring any of this land. It will ultimately be a revenue or cost or profit sharing model with the landowner, whereby we can ideally get a funder in to fund the upfront, and we can manage the generation of the credits, and ultimately selling them on to third parties. And I think that's really where the real interest comes from this. I think Cathal mentioned airlines earlier, but there's a whole host of big tech and corporates in Ireland who are really interested in nature-based projects. I think is the critical thing. Projects whereby they can jump in the car, drive 2 or 3 hours away from their offices, and actually see these projects at work, sequestering carbon, but also having significant positive community benefits. I think we have a stat here around the actual potential size of the carbon credit market. Obviously, there's been a bit of a bad rap from greenwashing allegations, but again, we see an Irish nature-based project as being really attractive relative to these projects, some of which are in far-flung places where there's not that level of I suppose visibility or transparency, and ultimately corporates are willing to pay a premium for that. Interestingly, in Ireland in particular, with data centers, so they now account for 21% of all electricity consumption, and this is expected to grow to 27% by 2028. I think that was only 5% back in 2015, 2016. So the amount of energy that these largely tech companies are ultimately using in Ireland is significant. So there will be large pools of capital to actually offset that and put it into carbon credit or biodiversity credit projects as these corporates move towards meeting their net zero targets. Okay, so I've rambled on for long enough, but just really to tie everything together in a quick summary slide here. I think Cathal would echo most of these points, but we see a huge opportunity across the entire green economy, not just mining. We see an opportunity to generate near-term revenues and from a number of attractive propositions. So we have an M&A focused model. Again, we'll say it again. Revenues are the key criteria for any of these businesses we're targeting. We have an experienced team with a proven track record of generating value. I think Cathal listed off some of the real successes, Cove Energy, Amryt, and Open Orphan earlier in the presentation. So we have a robust cash balance of 4.9 million at 30th of June, which gives us I suppose the ammo to actually to complete M&A. We also have a flexible financial model, so no committed costs on any future exploration projects, which again is key. And then we also have our existing assets, so the potential to complete deals on these, spin these off, get equity stakes in other businesses, and ultimately deliver value into the future to our shareholders from these projects. Okay, so I think Zach, you have a few questions to
yes,
shoot.
I have. I've got a few probing questions. You've actually, I think, between you probably covered most of them, but it's probably good to have them in one place, if you see what I mean, in the last minutes of the webinar. The first question is for Carl, which concerns the share price. Were you concerned in recent weeks when the share price dropped down just under 8 pence?
Zach, good question. I think I dealt with that earlier, but no harm to re-emphasize it. These projects were not in them for a sprint. I bounce the share price up for 6 months, and then it's a marathon. Now, it's not going to be a long marathon. And sometimes a bit of liquidity, a bit of churn is no harm. We didn't expect it to go down to 8p. It probably overshot. It was up to 17.5p. That's 75% up at one stage within 8 weeks. That was probably a bit too far one way. So we're happy for it to come down a bit. It's kind of overshot. You know, share price is like overshot all the way. So certainly below the IPO price, we weren't happy. However, I said an Open Orphan, we were 40-50% down in 6 months, and then within a year or two, it was many multiples. So again, we look, part of the reason we're out talking again, sometimes you're in deals, you can't talk. We went kind of quiet, and when we don't talk to our investors, naturally some of them do get worried and sell, but that creates an opportunity for other people to buy.
Right. Obviously, the IPO was a success. You raised over 6 million in April to fund your projects. How have you found the market since you listed, and the view that people have of the company?
Yeah, as Jack said, look, we try and keep our overheads very, very small. We've still the bulk of the cash from the IPO, which is a nice place to be. And look, the market reaction was, and I kind of joked at the early, but it's all serious, about transitioning from metals to the green economy, transition from loss-making activities to revenue-generating profitable. But I would get a lot of stick. But the benefit of having done my 5th IPO and being the largest investor each time is Fastnet. Zach, the first time you and I met was 10, 11 years ago when I was promoting Fastnet. Oil prices collapsed, and I would get a lot of flack. So instead, I transitioned from oil and gas. We changed the name to Amryt. And if I had stayed, I think, and that's why my worries with the metal, if we'd stayed in oil and gas, I think we'd all know today, Fastnet would never have got to $1.5 billion. Whereas with a simple name change in Fastnet and an asset change, we kept the cash. Amryt became a not a monster success, or what people say, but we did bring it from 50 million to 1.5 billion. That was pretty good. So I think people are used to me in this, and my sole focus, Zach, is can we generate money for investors, and can we do something that's, particularly in this one, with all kids, can we do something for the green environment? Like, I've young teenagers go home and they keep asking me, listen, old boy, you're 60, what are you doing for the environment? And I say, well, look at European green transition.
The final question just for now for you, Carl. Obviously, you've talked about buying or revenue generating assets. The $64,000 question, I suppose, is when might that happen?
And the $64,000 question back, Zach, is we'll update the market as and when we can, other than to say that that's work in progress. You don't do 5 IPOs and get to hang around for too long. So the plan is well underway. We could potentially have done a deal a month or two ago, but sometimes, Zach, the best deals you do in life are the ones you don't do. So I think going back to those Fastnet days, I had an option of reversing Fastnet into a much larger oil and gas company. I refused to do it. That much larger oil and gas company went bust eventually. So again, we might have been looking at something in recent months. We mightn't have done it. But as soon as we've something, Jack and the team have a lot to do at the moment to monetize our existing assets. I bring equity stakes back to our balance sheets and basically develop the 2 option assets. But yeah, the plan would be at the appropriate time to announce, most important, a revenue generating asset and an asset that we can turn around and make it profitable very quickly.
Moving on to Jack, you've said you want to sell or partner the Ulcerum project in the near future. Again, when is that likely to happen?
Yeah, well, look, I think so. We've done our drilling up in Ulcerum in this summer. We've got results for 8 of the 13 holes. I think getting the remaining results will be a key catalyst. We've been engaging with potential parties or potential interested parties over the last number of months. Myself and Aidan were at a conference last week, engaged with even more. So ultimately, I think we've largely achieved what we wanted to achieve with the Ulcerum program. So it's now, once we get these final results out, and we can really start accelerating these conversations and hope to get something done in the near future.
Can we expect, this is for Jack as well, can we expect partnering deals on other exploration assets that you might get involved in?
Yeah, we also have the Pajala copper project up in northern Sweden. So that's an ex-Anglo-American project. Has strong copper potential. Copper's in one of the few metals and minerals that's in a very positive market sentiment. So we're talking to, again, a number of parties on that and looking to get something done in the near term. Can't say a definitive timeline, but all I can say is we're looking to get something done as soon as possible.
Also for you, Jack, what is the potential value of the project in Cyprus, assuming that you can get the project off the ground?
Yeah, well, I think, look, we have an option agreement on it. There is potential to extract a meaningful amount of copper there. The actual water circulation testing in the next stage of diligence is a key thing that will determine the direction of the project for us. And we think we can do it pretty cheaply. And again, following that, it's one of these things. There's multiple shots on goal with this, because we also have the potential a solar project down the line, which I already mentioned. So there's a few different avenues we're exploring to create value from that project.
I mean, Carl mentioned the China factor. Most Western countries are investing in critical metals and trying to be non-dependent on China. That's obviously, or is that obviously helping your cause at EGT at the moment?
Yeah, I mean, look, there's significant uncertainty and geopolitical change out there at the moment. China obviously is dominant in most critical metals and minerals. I think Cathal mentioned bans that China have put on certain rare minerals in the last few weeks. The Australian government are obviously investing heavily. But our own projects, copper, rare earths, they're critical to industries in Europe, for renewable technologies and a whole host of other industries. So we think, the Critical Raw Materials Act has come through from the EU. They're trying to bring a lot of production to continental Europe. And so we think that bodes well for a potential partner who's looking to come in, take our assets off our hand and get the EU supports to get that developed. But ultimately, hopefully as equity holders of those businesses in the future, we'll benefit, and our shareholders will benefit massively from that as well.
Right, moving back to Carl, EGT has already reported positive results for the first 4 drill holes of the 13 at Ulcerum. Are you optimistic off the back of that for what you can achieve in 2025 there?
Yeah, I think hopefully, as I started, Zach, I've never been more optimistic, even though I've just turned 60 with teenagers, 3 of them on my hands. No, I'm really optimistic. I think, look, we've all, like most of my equity, every time I make some money in one company, I reinvest in AIM. And people shouldn't beat up. The entire European stock market has been shit the last 2-3 years. Post-pandemic, Russian invasion of Ukraine, high interest rates, high inflation. That is all gone, as far as I'm concerned. Putin's white flag is going up as we speak in Ukraine. Cut a deal. It's already happened in Cyprus. So I think we're going into next year really optimistic. And the beauty about it is, this is our 5th IPO. When we raised the money, we still have the vast bulk, as Jack says, with nearly £5 million in the bank. We've got 3 full-time staff and very, very modest salaries, and that's it. And I'm the most underpaid, non-exec co-founder on the whole of AIM. I think it's, Jack, what am I paid? 25,000 or something, Jack?
Yeah, correct. Yeah.
So my salary is the grand 25,000. But look, again, it's the American style. If you don't believe you can make money from your shares, you shouldn't be in this game. So going into next year, I think we've a lot we can do. And I genuinely think the market is turning. All those bad news that we've had since the pandemic, they're all going away. And it's a great time to be buying. We've got cash. A lot of the other small companies doesn't have it. They would have raised money and burned through it, as you and I know, by the companies we invest in. So no, it's a good place to be. And I'm really excited what the year will bring us as we go forward.
Well, just finally, and we're running out of time for Carl. You admitted that you're quite long in the tooth and you've been around the block in terms of various companies and everything else like that. Do you think that your track record and the track record of the team alone is enough to garner or foster investor interest?
No, to be honest with you, Zach, we're all only as good as our last deal. Let's be honest with you. None of us can live in the glory of our past. So I'm only good as this deal. By putting my money, there is 40% of the company owned by myself, Jack, and the insider team pre-IPO. We're locked up for 3 years. So we wrote big checks. I've written about guts of $1 million of real money in the company. So I think we shouldn't dwell on our history. That's the same for everything. But I think that would have given us a lot of experience, and particularly to know the deals not to do, but also the deals to do. And it also taught us move fast. Small companies should not be an aim to grow at 10 or 15%. I invest in small companies' name to double or triple my money. And that's why we IPO small caps. Our aim is to double or triple our investors' money. What period in time? We shouldn't say, we can't say, but that's our plans.
Okay, well, gents, we've just about run out of time. So thank you to Jack Kelly, thank you to Carl Friel, and thank you to, thank you for presenting to us today.
Zach, thank you very much for giving us the opportunity.
All the best.
Cheers.
Thank you.
Thank you. Bye.